Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Russell Rhoads, Head of Research at EQDerivatives, to discuss why traders have turned to XND to hedge. Russell, it's great to see you. Welcome back to Trade Talks, and let's talk about what has changed since we spoke last month.
Well, the market seems to have maybe put in a bottom. That's one thing that has changed. But something that stayed the same is implied volatility in the Nasdaq arena remains elevated relative to other broad-based indices, which is making both NDX and XND options relatively expensive, but also maybe creating some opportunities as well.
So with it being more expensive, how are managers looking for protection?
Well, again, we put in it looks like we may have put in a bottom. I'm not sticking with that one. And I think you can still tell that a lot of portfolio managers are looking for different ways to implement protection. When implied volatility is high, that means options are relatively expensive. So you try to come up with a way to maybe mitigate the cost of that protection. One way to go about doing that is selling a call against your portfolio or selling a call against some of the individual stocks in your portfolio to help pay for that protection. We talk about NDX an awful lot, but XND has seen a lot of collars being put on over the past few weeks, actually going back to late March. I'm still tabulating all of the different collars and all of the different rolling transactions, and I'll have something up on the Nasdaq site in the next day or two about that. But portfolio managers have really been looking for protection. They never like to pay for the protection. So giving up some upside through selling calls is how they've been paying for the protection from a drop in the Nasdaq, but using XND options.
Why do you think traders have turned to XND to hedge?
Well, in this case, it's always a 100 or a 200 lot, which would be a 1 or a 2 lot in the NDX options. My assumption is either they'd like to trade around this, scale in and out of the positions. I haven't seen a lot of scaling though. Or it could be a portfolio manager that has a lot of individual accounts that has a high tech exposure, and they're using XND options and dividing those trades up on their end to protect against maybe some smaller portfolios that have that sort of exposure.
And finally, what are you watching with respect to the Nasdaq 100 to determine if we have seen the worst of the down move?
I always consider implied volatility and volatility indexes as some of the best indicators, as giving you an idea of what the mind of the market is. And as I noted a little bit earlier, VOLQ remains at a premium relative to the comparable volatility indexes. Indicates to me that there's still some concern with respect around the heavily weighted stocks in the Nasdaq 100 or the heavily weighted industries. I'd like to see VOLQ maybe at a discount to some of those indexes, but also if we continue to see VOLQ work lower, even on days or a couple of days where the Nasdaq's moved down as well, I think that's an indication that concerns are starting to come out of the market.
All right, Russell, we appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.